Okay, so I'm going to take a look at control accounts, and May 2015, question 5 gives us part A, the following information relating to Nits and Bits, the sole trader for the year, and extracts from the book. So there's opening balances there for the receivables ledger, 34,110 on the debit and 480 on the credit. And there's also the summary of transactions during the year, and you're required to prepare the receivables control account. So just to recap, the receivables control account is like a master receivables account, and on the debit side you will have your main balance for the receivables, and you'll be adding on any credit sales to that. You only deal with credit sales in the receivables control account, never cash sales. You'll have interest charged, again that'll be increasing the main balance. Irrecoverable debt that comes back on the books to be recovered will be added in there, where any dishonoured checks will come back in to be receivable, and refund on any credit balances will also go in there on the debit side. On the credit side you will have sales returns that will offset against your main balance, so sales on the debit, sales returns on the credit. Discounts allowed to your customers will reduce the balance owed, and therefore on the credit side. And irrecoverable debt, bad debts written off, receivables that aren't going to pay and you've written them off as a bad debt will be on the credit there. Any payments from your receivables will go into the credit side, and any contra entries will always reduce the main balance, so they're always on the opposite side to your main balance there. So in the receivables you'll have a contra entry on the credit, and you'll see the corresponding entry of that on the debit of the payables with a credit here. So that's a summary of the receivables control account. So if we take our question and set up our T account, and we can start off with those opening balances. And on the debit side your main balance there was 34,110. So you will be writing this up. So just for demonstration purposes I'm showing it in a spreadsheet. And then the entries that you're given, so your credit sales will go in there on the debit side, that was 120,500, and you never put in cash sales, so exclude the cash sales there. The sales returns will go in on the credit side there, 4650, and we also have the contra. So the contra entry there, the amount is 3050, and the discount allowed to our customers there, 970, it will also go on the credit side, and payment from your receivables that will go through your bank or you have lodged to your bank will be on the credit side, 102350. And that allows me then to balance the account, and the balance to be carried down will be equal to the total of the debit minus the sum of the credit side. So that's not going to mean anything until I actually put in a total there, so I'm just going to total that, and it'll balance then for me. So my balance there is 43,110. So balancing on the short side, total each side, just going to do this automatically, you use your calculator to do that. So total each side on a clean line on its own at either side, and then bring down your balance to the opposite side. So balance brought down for the next period is 4311. And just to highlight that they are totals, I'm going to put them into bold, and you can format them as well then for totals. So I'll just put a little line underneath those as well. Okay, and that's your receivables control account. Okay, so part B starts with a little bit of theory, asking you to outline one reason why preparing a payables ledger reconciliation on a regular basis is important. Well, a payables ledger reconciliation is where we reconcile the payables control account with the total of the individual payable ledgers, and that acts as a cross-check and a mechanism for identifying errors. So control accounts are prepared to keep the nominal ledger free of detail. The control account is an umbrella of the overall payables in this instance, and it helps with accuracy and finding errors. And checking the control account against the individual listings of payables helps to form an internal checking mechanism. So that's important. And just to understand this, if we take the payables control account, just get that there, both control accounts, the receivables control account and the payables control account, the figures are taken from the day books. So payables control account, the credit purchases are taken from the purchases book, the purchase returns are taken from the purchase returns book, etc. The control account is then cross-checked against the total of the individual payables listing. So all the individual payables accounts are added up, and that total then is cross-checked with the control account balance. And this helps to identify errors, and of course the errors have to be cleaned up, and therefore we do a reconciliation to clean that. So that's what we're going to do now. So parts 2 and 3 of this question must be read together, where it says, first of all, to prepare the restated balances of the adjusted payables listings as at the 31st of the 12th 2014, and also the next part asks us to prepare the payables control account as at 31st December 2014. So you can set that up as just a listing of adjustments first of all on the one hand, and on the other hand set up a payables control account. So you do the two together and you work through the errors and write them into the relevant books. So first of all, you're given the balances. So the balance for the payables listing was given as 49,045. So I'm just going to show that there first of all. You're also given the payables control account as a balance, and balance over there on the credit side as 45,170. So you see straight away that these don't match, and therefore we have to correct the errors. Okay, so you go through your list of errors, and the first item is the opening debit balance of 700 was omitted from the payables control account in error. So when you're doing these, you have to identify, does it affect the listing or the control account or both? So this one clearly states that it affects the control account. It was an opening debit balance of 700, so therefore I must put in that opening balance. Now you can simply call it error 1 if they're numbered, or you can state what it is. So that 700 there has to go in on the debit side, and that only affects the control, it doesn't affect the listing. The next error, discount received of 1,240, were completely omitted from the books and records. So if they were completely omitted, then they will affect both the control account and also the individual listed payables. So that has to go into both. So if we take the listing first of all, and in this case I'm just going to call it discount received. So as we were paying our payables, we got a discount, and that was 1240. I'm just showing that as a minus figure that would reduce the main balance that I owe to my payables. And it also has to go into the control account, and a discount received would obviously reduce the main balance on the payables, so it will be the opposite side, so debit the payables control account there with the 1240, and that's that. And the next item is 3,750 of cash paid to a supplier was correctly treated in the payables personal ledger, but recorded as 7,350 in the control account. So the error there is in the control account, and it basically means that the error is for 3,600. So the cash paid was overstated by 3,600, so the payment would have been on the debit side of the payables, but it was overstated by 3,600, so I'm going to reduce by putting back in the 3,600 there. And again, just to state what it was for, so it was a payment to the payables, and that was an error on the payment, if I state that, and that's that one corrected. And the next entry is a contra entry of 1250 was correctly treated in the payables control account but omitted from the payables personal ledgers. So it was correctly treated in the control account, so therefore it's only affecting the individual ledgers. So therefore I come back to the listings and it's for 1250, and again this is a contra entry. Contra entry always reduces the balance, so it's a minus 1250 there. The next item is interest charged of 875 by supplier on an outstanding balance owed was omitted from the control account. So again here it's just the control account that's omitted. This item, and it's interest charged. So again, if I'm being charged interest, sorry, I'll just put in the title of it there, it's going to increase the balance that I owe there to my supplier, so 875 on the credit side for that, and that's that one corrected. And the next item is goods purchased costing 710 were recorded correctly in the payables control account but omitted from the payables personal ledger. So back here to the individual ledgers, goods purchased of 710 will increase the balance that I owe to my payables. So purchases there of 710 will be a plus to that. And two more items. Okay, so the next item is goods returned to suppliers to the value of 2,750 were not reflected in the payables personal ledgers. So therefore it's the listing that will be affected. So I'm just going to add that in there. And the value again was 2,750, and again that'll be a minus figure. It will reduce the balance owed, and it doesn't affect the control account. It went through correctly on the day books and into control. And finally, a closing credit balance of 3,190 was omitted from the listing in error. So the credit balance was omitted. So that's the credit balance will, remember, increase what's owed to a payable. So therefore it's a plus to that. And it's just the individual listings that's affected, not the control account. And those are my entries then. That allows me to total. So in here I'm just going to get the total there. Obviously you can use your calculator to do this, and hopefully this will balance the same, and it does. So the balance as per the control account is now correct. So we have reconciled the difference between the two.